Hello guys, can you hear me now? Are you hearing me now? Are you guys hearing me now? Okay, awesome. So let's get back real quick before we continue. Um so real quick here. Awesome. So yeah, we are actually starting from the beginning. Awesome. So, welcome in everyone, and I'm really sorry for the sound. We have a little bit of technical issue, but we have already fixed it. So, as you can see, as the title suggests, tonight's session is called "From Beginner to Profitable: Mastering the IQ Option and Risk Management." And so, just as the title said, it is exactly what we're going to be doing today for the next hour. And so if you already know the basics of trading on IQ option, or if you already know the basics of trading itself, but you still can't sort of turn away or from emotional trading, or you cannot stay consistent and stay consistently profitable. So tonight's session is for you. And even if you don't know anything about the IQ option platform, or if you don't know anything about trading in general, tonight's tonight's session is actually for you, because we're going to be talking about a lot of stuff that will help you from the very beginning, from starting trading on IQ option, of course, all the way to becoming a consistently profitable trader, and also how you can avoid blowing up your account or making unreasonable losses. And so that is tonight's sessions, and that is what we're going to be doing tonight. And so a quick roadmap of what we're going to be doing, or what we will actually going to be talking about. So first we're going to talk about honestly why most traders lose money. This is the first thing we're going to talk about, and then we will get a hands-on experience on the platform, or with the platform itself. And then after that, we're going to be covering the risk rules that actually protect your account and protect you from blowing up your account. And then we're going to talk about the emotional traps that quietly wreck the top, or wreck your account, or sort of make you blow up your account, so that you're not going to actually be blowing up your account. And then we're going to be bringing it all together into one process, which you can, or any one of you can actually follow as a trading guideline, or as a guideline for his trading journey. And also I've got something for you near sort of the end of this, not the end of the live stream, of course. We have a promo code, 120% promo code, and we're going to be revealing it later in the live stream. And so stay tuned and don't move away from your screen. Yeah, so let's dive right into it. So the first thing we're going to be talking about is the beginner trap and why beginners lose money. And so here's the first thing we're going to be talking about: why most beginners actually lose money. And let's be honest with each other for a second, okay, for a moment. Because I think this is exactly why most beginners struggle, and nobody really tells them straight why they struggle with this, or because they didn't have a mentor that would help them or guide them, and help them to avoid losing money or blowing up their account, or even guide them on how they can actually start trading. And I guess that is the reason why a lot of you guys are joining the Telegram groups and the Telegram chats, so that you can actually learn from others, or other traders, or other profitable traders, or the most successful traders in the groups, so that they can also guide you and help you in your trading journey. But that being said, most new traders lose money for the same four reasons. As you can see in this screen, a lot of traders, or most traders, lose money over and over again for this four reasons. The first one is they have no trading plan. Okay, they just enter the market based on their feelings instead of a rule. They don't have any plan on their trading whatsoever, and they have no sort of roadmap on what they're going to be doing on that day. So they just enter and execute trades based on their feelings. And the next thing is emotional entries. Because you enter the trade without a plan, now you're going to be trading based on your emotional feelings, based on what you feel. If you made profit, you're going to feel excited and then double down. Or even if you put $10 on the first trade and you win, the next thing you're going to be doing is doubling down on that single trade. Instead of another $10, you will then put $20. And if you lose, now you're going to be in another emotional sort of situation, which will force you, or which will make you to make another emotional entry or emotional decisions, which is a revenge trading. Okay, you will go from excitement to getting angry, and now you're going to be trading, doing what we call a revenge trading, trying to make your money back. So you're going to be just jumping from one trade to another based on emotional feelings, not a real plan, or instead of analyzing the market, or instead of having a real setup. And the next thing is they have no risk control whatsoever. And so you enter the trade or the market, even if you know how to analyze the chart, how to analyze the market, or how to even execute trades, you have no risk control whatsoever. And so they are risking way too much on one single trade, which make a lot of you guys, or a lot of beginner traders, or a lot of people lose a lot of money, or even end up blowing up their account because they don't know, they don't have a position sizing. They don't know what to put on a single trade. Someone will even deposit $100 and will just throw away $50 on one single trade, or someone will even throw away the entire $100 because they're thinking if they win the trade, if the trade is successful, they're going to be making a lot of profit. But they are not also calculating the worst case scenario. That is the best case scenario. The best case scenario is if the trade becomes successful, or if you end up winning the trade. That is the best case scenario. But the worst case scenario is, what if you lose the trade? You have now blown up your account and you have nothing to trade again, and it is actually game over for you, because once you lose your entire capital, once you have blown up your account, it is a game over for you. You have nothing else to do. And so tonight we will help you avoid making this kind of decisions, and help you become consistently profitable traders, or consistent successful traders, whatever. And so the last but not the least is over trading. Okay, so a lot of traders are going to be taking, or a lot of beginner traders, of course, are going to be taking too many trades, way more trades than they should have been taking in one single day. Someone will just be trading for 10 hours, 5 hours, or 3 hours. It depends if you are trading based, you have a full control of the market and a full control of yourself. You know what you are doing in that market. So there's a difference between a professional trader spending 3 hours and a beginner trader spending 3 hours and trading just out of boredom, instead of having a real plan and trading, or making his trade based on, or because of a real opportunity that actually shows up. And so these are the 4 reasons that actually make a lot of beginner traders, or a lot of traders, lose money, regardless of whether they are beginner or they are new, or anything else. And so if any of that sounds like you, that is completely fine. That's exactly what we're going to be doing tonight, and that is exactly why you are here. And we're going to be fixing all of these problems, and tonight we're going to fix all of your issues one at a time, of course, starting with the platform itself. Okay, so let's move forward to actually get a hands-on experience on the platform itself. Yeah, awesome. We have some noise on the background. I guess that is fixed. So Yeah, moving forward on the platform itself. So before we enter the platform, let's make sure that everyone actually knows their way around here and what we're going to be doing in the next few minutes. So not just the strategy, when if this is for the beginners, if you are not a complete beginner, if you actually know some stuff about the platform, that is very okay. Just be patient before we move to the next chapter. But this chapter is for those that are complete beginners, or that don't know how to navigate the IQ option platform, or those of you that don't actually know how to even trade on IQ option. And so this is for those people. So in the next few minutes, I'm just going to be showing you where your funds actually sit and how you move them in and out, how you can deposit and how you can withdraw your money, how you can trade, and how the entire trading works, and how you can set up your amount, set exactly how much you will be putting in one single trade, and also know your direction. And I will explain to you how you can know the expiry time and how you can set your expiry time, and also how you can increase or decrease your size position sizing, depending on what you're going to be doing, or depending on what the market or the opportunity is at that moment. Also, how you can read your balance properly so that you always know how much money you have, and also how you can hide your balance if you don't want like other people to know how much money is in your account. And everything that you need to learn about IQ option platform, I'm going to be showing it to you right now in the next few minutes. So let's just open the platform to see how we can trade on the platform, of course. Yeah. So um, before we get started, let's reveal the promo code so that you guys can actually see the promo code and you can actually use it. And so here's the promo code. It is 120% deposit bonus. So it is quite different than the promo code we have last week, which is a risk-free promo code. This one is a deposit bonus promo code. And so but guys, you have to stay focused. If you don't actually know how to trade on IP option and how to use the platform itself, I suggest you stay focused on what we're going to be doing for the next couple of minutes, so that you will learn everything step by step, because I will be explaining everything step by step, so that everyone or anybody can actually understand what we are talking about tonight. So as we can see, here's how the platform looks exactly. When you open the platform, when you download the app on your computer or on your mobile phone or on your smartphone, wherever you are using the app, this is how the platform actually looks like. And so if it is the first time you're actually using the platform, or it is your first time downloading and opening the platform, here's the interface. Here's what you're going to see in your screen. And so you're going to be actually depositing money on your account. And so as you can see right here, there's a deposit button, a very big deposit button that you can just click. It will take you directly to the deposit section. Okay, so if you click deposit, here's the deposit section, and as you can see, there are many different deposit options. There is a bank transfer. You can transfer using a bank transfer, but the minimum deposit option using a bank transfer is $13. So you cannot deposit $10 using a bank transfer. The minimum you can deposit is $13. And then if you are using a Visa card, the minimum deposit amount is $10. And if you are using an Apple account or Apple Pay, doesn't matter, it is still the same deposit amount as the Visa payment method. And so There's also a crypto deposit option. So if you're going to be using the crypto deposit option, there's USDC using the Binance Smart Chain, and then you can deposit Bitcoin. But the minimum deposit amount using the Bitcoin deposit option is $25. And so if you are depositing using Bitcoin, the minimum amount is $25. And then there's Cardano, there's XRP, Litecoin, Ethereum, and then you can also deposit using USDT. So here's a Tether USDT TRC20. You can deposit, but the minimum deposit is also $10. And so just like the rest. And then there are other methods as well. You can deposit using Google Pay itself. The minimum deposit amount is $10. As you can see, you can deposit using Skrill. It is also $10. You can also deposit using a MasterCard. The deposit amount is also $10. And you can deposit using Nutella or Wallet. So these are the deposit options or the payment methods that you can use to deposit money into your IQ option account. And so once you select what you want to use, let's say you wanted to deposit with Tether USDT, just click it. As you can see, here's the minimum deposit amount, which is $10. And so if you are depositing $10, you just click the $10. If it is $30, you can click $30. If it is $40, you can just use your keyboard. $40. As you can see, you can increase or decrease the amount, but it cannot be less than $10. So the minimum deposit amount is $10. If it is $100, you just click it. And so if you have a promo code, and we do have a promo code, as you can see, which is LAN 120 AF. And so if you put the promo code, as you can see it in the screen, you will have 120% deposit bonus. And so after putting the promo code, you can just click I hereby accept the terms and conditions, and then you can just proceed to payment. And that will take you to the payment page, which you can then copy the address that you have been given, the USDT TRC20 address that you've been given by the platform. Then you can deposit your money, and then after the deposit, your money will actually reflect in your account within the next few seconds, or sometimes just few minutes. Your amount will actually reflect on your balance will reflect on your account. And there is another way you can deposit. If you click your profile image right here, you can see there is a deposit funds. So if you click it, it is the same thing as clicking the deposit button right here. So that is the first thing. So after you deposit money into your account, the next thing is how you can start trading, right? But when you come in as a beginner, you don't have to start trading with the real money. You have to first learn how the platform works, how you can trade on your own, and then you can then start trading on a real account. And so if you click on your balance, you can then select. Here you can see there is a $10,000 practice account. Let's actually remove this. You can come to your setting page here, settings, and then you can come here, balance. So you can see here there's hide account balance. You can click it. As you can see, you can now see the $10,000 demo account. So this $10,000 is not a real money. This is a demo account. So it is not a real money. This is for only testing purposes. And even if you blow up this $10,000, you can actually you can just add the balance again, since it's not like you will deposit again. If you lose the $10,000, you can just add the balance again. So that is very easy to do. And if you don't want people to see the balance on your account, you can just click the hide account balance, and now your account will actually be this quiet. And so the main balance will disappear, and it will be something like this, as you can see on the screen. And so the first thing you're gonna want to do is change this trend lines, which you don't actually know what this means. And this is actually the price movement. The trend line are actually the price movement. It is following the price when the price is actually going up or down, so it is following the price movement. And so if you come here, you can actually change. Let's put this thing down. If you come to the chart type, so you can click chart type and you can change it to candlesticks. And so this will help you to actually understand what is actually happening in the market and what is going on. And if you have joined our last webinar, the last live stream we have actually explained how you can read the chart, how you can understand the market, and how you can execute trades based on the chart itself, even without using any indicator. And so if you don't know how to how to read this chart that you're actually seeing in my screen right now, I suggest after this webinar you go back and watch our last webinar, the one we have last week, where we have a deep explanation of how you can actually read charts. So that being said, we will then come here. Now, after every 5 seconds, you will have a new candles, and that's what the candlestick period means. So now the candlestick period is at 5 seconds. And so if you want to change it, you have 10 seconds. If you click 10 seconds, that means after every 10 seconds, you will have a new candle. A new candle will open. So every candle you see here represent a 10 seconds of price movement. So you have a red candle and a green candle. And so as you can see, after 10 seconds, another candle have changed. And so you can have 10 seconds, 15 seconds, you can have 30 seconds, and you can have 1 minute, 2 minutes. It depends on how what your strategy is and how you analyze your market. So we will now choose 1 minute candle so that you can actually understand how the candles actually works. So as you can see, we have red candle and a green candle. And what this red candle represent is, it represents sellers. So as you know, the market is about sellers and buyers, or it is sort of a war between the buyers and the sellers. And if the market is down, or if the market is going down, it means that the sellers are actually winning that war. And if the market is going up, it means that the buyers are actually winning the war. And so I suggest you go back and watch the last webinar we have, or the last live stream we have last week, so that you can understand, or you can learn how you can read the chart. And also there are many live streams and many videos on this channel, and so I suggest you watch a lot of those videos so that you can actually learn how you can read the chart and how you can read the market and how you can actually trade on your own. And so that is what those candles means. And so the red candle is called bearish candle, and so it represents a bearish movement. And also the green candle is called a bullish candle, and it represents a bullish movement. And so now we have a green and red candle. And so what those candle period means, or the chart type, chart time frame, or the chart expiry time actually means, is that, or the candle expiry time means, is that after every 1 minute, now we will have a new candle, just like I explained about the 10 seconds or the 5 seconds expiry. So it is the same thing. But here's where a lot of you guys get confused. There's a difference between the chart and the trading expiry time. And so these are two different things. The candle expiry time means that after a certain period of time, you will have a new candle. Just as you can see now in the screen, we now have a new candle, and it means that after 1 minute, we have a new candle. So every candle here represents a 1 minute of price movement. But the expiry time on your trade means that after that period, your trade will actually close automatically, and then if you win or you lose, you will get your result after the trade has actually finished. So that is what we actually mean. So here's the expiration time for entering trades. Okay, so if you come right here, here's the expiration. As you can see, you have 30 seconds, you have 45 seconds, you have 1 minute. You can actually change this period or based on what you want. But let's say you're going to be trading for just 1 minute. So you have an expiration time of 1 minute, and you have a candle period of 1 minute. So you can have a 5 minutes, and if you have a 5 minute expiry time, this means that after 5 minutes, if you open a position now, if you enter a trade now, it will expire in the next 5 minutes. But throughout that 5 minutes, since you have a 1 minute candle expiration time, it means that you will have 5 different candles before your trade close. So that is the difference between the candle expiration time and the trading expiration time. So these are two different things, and I hope you guys understand the difference, of course. So the next thing is position sizing. And so right here, as you can see, here's where you will decide how much money you are placing on a single trade. If you have $100 balance and you are trading with $1, you can just select $1. If you are trading with $100, you can select $100. If $1,000, you can select $1,000. So let's say we're gonna be trading with $100. So now you have $100 position, and what this means is that after for every single entry you have, you will be placing $100 per trade. So that is the difference. And as you already know the difference between forex trading, or if you don't know the difference between the forex trading and binary trading, is in binary trading, this is why we have this expiration time. In binary trading, you will have a fixed expiration time before you open a trade. And so if you will be trading for just 1 minute, you will have a 1 minute expiry. If you will be trading for 3 minutes, you will have a 3 minute expiry. And so after that 3 minutes, your trade will close automatically, and then you will receive either your profit or whatever the result is. So that is why you have an expiration time here. But if you are trading forex on IQ option, that is different, because you're not going to be setting the exact expiration time. So yeah, so this is the setup. Now you have here where you will put how much money you would be trading with, which is $100, and you have an expiration time which is 530 seconds, depending on what your strategy is and what the opportunity at that moment is. So we have a buyer and a higher and lower. And higher means a buy position. If you click higher, it means you're going to be opening a trade, a buy option. And lower means sell or sell option. And so if you click lower, that means you will be selling for the next 1 minute or for the next 30 seconds. And if you click higher, you will be opening a position for the next 30 seconds. And so let's say we are opening a lower position or a selling position. We will come here and click lower. And that means after 30 seconds, we will either lose or win. So I will just open a position without any analysis, even though we can analyze the market and see where the sort of the flow is, or the sort of the what do we call this, support level is really, and the resistance level. So we can look at that and we can see where the trend is actually heading. So we can open a position based on that analysis. But then I'm just demonstrating how you can buy and how you can sell, how you can open a position and how you can actually close a position. And so let's say we are opening a buying position here. So there's 6 seconds left before we have a new candle, right? And so now after 1 second, we will have a new candle here. And so if you think that the market is going up, you just click higher. And now you have opened a position for the next 30 seconds. And we put $100 and we open a position for just 30 seconds. And the reason why we use 30 seconds, so that we're not going to be wasting a lot of time in demonstrating to you how to actually buy and how to sell. Okay, so as you can see now, we're actually losing this trade, and in the next 3 seconds it will close automatically. And so now you can see that the position has closed automatically, but it is a negative, or it is a loss, so we lose a trade here. And so if you want to click a lower position, you just, if you think that the market is going down, you just click lower. And now in the next 30 seconds, I don't know, okay. So now we have clicked sell lower because maybe we thought or we assume that the market is going down, and so we sell. So that is the difference. If you think that the market is going up, you click higher and you buy. And you think that the market is going down, you click lower and you sell. And so your expiration time is the actual time the market will actually expire. And we are using 30 seconds, as you know, so that we will not waste a lot of time in actually trading. So this trade has been a winning trade. So we have now opened two positions. One is a losing trade and the other one is a winning trade. And so here's the profit or the turnover after every trade. If you put $100 and you will have an 85% win rate, that means that you will have $85 per winning trade. And if you lose the $100, it means that you lose the entire amount you put on that specific trade. So this is very important for you to know. If you put $100, you will lose the entire $100 on a single trade. This is why it is very important to know how you can open a how much you will be putting per single trade or per single position. Yeah. So I hope you guys have actually understand how this. Okay. So I hope you guys understand how you can actually buy and sell. And so the next few things is here you can see the total portfolio when you open a position. And here's a trading history where you can see how many trades you have. As you can see here, you will see the amount of trades that you have. So this is reflecting on a what do we call it, a demo account, not a real account. And here you can have the chat and the support. You can chat with many people. There's a support here. You can contact the support team, and you can have this English chat here where you can chat with many traders. And there's a forex chat where you can chat with many forex people. And then there is stocks chat. You can chat with stock bros, and there's a crypto chat. You can chat with crypto bros, of course. And then right here, there are tutorials, and these tutorials will actually help you understand how to trade in the market and how to use the platform itself. And so there's basics and there's many technical and fundamental analysis videos that you can actually watch inside the platform or within the platform. And so these are very important. If you are a new trader, these videos will help you understand what to do in the market. And right here, there's a promo code. And so if you have an active promo code in the platform, you can come right here and you will see the promo codes. And then here is the leaderboard where you can see the top traders in that week or on that week. And so here are the top traders. You can see the top traders worldwide, and you can select the traders based on your own country. So if you click more here you can see the market analysis, the market news from the platform. And here there are tournaments where you can actually join tournaments. For just $2, you can enter this tournament, and there is a $5,000 prize pool. The prize pool is actually shared between the top traders. And so in this right here, you can see that the top 15 traders will share a prize pool of $5,000, and so you're just gonna have to pay $2 to join this tournament. And yeah, so these are the basic things that you need to understand, or that you need to learn on how you can use the platform. And there's a theme here where you can actually, okay, this is the Islamic account if you are a Muslim, and it just doesn't matter if you're not. So these are the basic things that you need to actually learn. And the last thing you're going to learn is how you can actually withdraw your money and verify your account. These things are very easy. You can watch those videos on how you can do that. And here's the withdraw funds. You can just click withdraw funds, and it will take you to the withdrawal section where you can actually withdraw your account. So that is very easy to do. So now let's go back to actually show you some other stuffs before we actually continue. And so as you can see, the code is here, and if you deposit money, if you deposit any amount, you will get 120% deposit bonus. So yeah. So now we have actually explained these things on how you can actually deposit and withdraw money from the platform, how you can trade, and how you can actually read your balance, and how you can open and hide your balance, and how you can change from a demo account to a real account. So the next thing we're going to be talking about is how you can protect your capital after you deposit money into your account. Okay, so I hope you guys are all with me and you are all understanding what we are actually talking about. And so this is very important for us to actually talk about. So the things that we talked about before are for the beginners that don't know how to trade on IQ option, or that don't know how to navigate the platform, how you can buy and how you can sell. And now that you know how you can navigate the platform, how you can deposit and withdraw, how you can trade, how the platform works, how you can select many things, the things that you have to learn, which is analyzing the market, they are inside the platform, and inside this channel there are a lot of videos that will help you make analysis. And we have many live stream, even I myself, we have many different live stream. The last live stream we have last week will help you know how you can actually read the chart and how you can make analysis. And so if you want to learn that, you can just watch some videos from this channel, or you can watch some of the live stream that we have in the channel, so that you can learn how to analyze the market yourself. So I'm sorry, guys. Awesome. Yeah. So the next thing we will be actually talking about is the risk only, right? So if you look at this, what we have in the channel on your screen, I mean, of course, is the risk management, okay, and the risk management rules. So we have actually 4 rules I want to actually talk about tonight, and I genuinely want you to take those things very seriously, so that you will not be blowing up your account and you will not be losing money in trading. Okay. So the first thing is you have to risk only a small amount, okay, a fixed percentage of your account on every single trade. So if you are a beginner, or even if it just doesn't matter, if you don't want to lose your account, if you don't want to blow up your account, because even if there is 99% chance, no analysis is 100% success rate. Okay, there's always a chance, even if it's a 1% chance, that you might actually lose money. That means you have to be very careful before you put all your eggs in one basket. So risk only a small percentage of your entire capital, so that if you win, you are on the good side, and if you lose, you have a lot of options, which will be incredibly hard for you to actually blow up your account. And say you have 10 eggs in your basket. If you throw all those 10 eggs in one basket and something happens, you accidentally fall on the ground, and the basket also fall, the chances of you might actually lose all of those eggs. They might actually be blown up, and now you have 0 eggs. And so if you have 4 eggs and you have 4 different baskets, if one basket has fallen, you still have 3 eggs. And so you still have other options. So you're not gonna go hungry. You still have other eggs that you can actually eat. And so this is very important, to raise a very small percentage of your account, so that you will have many options. But never your whole account, never your whole balance on just one single trade. That will be disastrous in the long run. Even if sometimes you win, there's always a chance that you might lose, and once you lose, it will be game over for you. Okay, and this is very important. The next thing is you have to decide your stop loss and your take profit right before you enter the trade, even before you enter the market, not after you enter the market or while you are at the middle of the trades. You have to write down what is your expected profit. And say you have $100 and your target profit is $20. If you hit $20 profit, you have to stop trading. So you have to have the discipline to stop trading after hitting your target. And if your stop loss is $10, if you lose $10, you have to stop trading and come back the following day. So there's also so that you can come back fresh and the market is also fresh, and you can continue to take many trades, which will be very near impossible for you to lose the entire amount you have or the entire capital that you have. Okay, so this is very, very important. And also know your drawdown limit. And the drawdown limit is the same thing as your stop loss. You have to know how much money you have to lose that you can actually stop trading. And so if you have $100 and you decide if you lose $10 you'll actually stop trading. If you lose $10 you must stop trading. Okay, otherwise you would actually continue trading, and you will end up doing revenge trading, and at the end of the day you will actually lose your entire amount, or you will actually be digging a hole you yourself can't climb out of. So it's very important to know your drawdown and to know your stop loss as well as your take profit or your target profit. Okay. And also never move a stop loss further away just to avoid taking loss. Okay, if you have a stop loss of $10, don't change it. Otherwise, you will end up doing revenge trading. If you say let's change it to $15, and then you will change it to $20, and then $25. Before you know it, you'll actually end up losing more than you should be. So this is very important, and I think none of this is actually complicated. It is very simple, but simple doesn't mean it is easy. Of course, it takes a real discipline to follow these rules every single time, or every time you enter a trade, or every time or anytime you're actually in the market, especially once emotions get involved. So this is very important for you to actually to have the self-discipline to stop when you have to stop, when you hit your target, or even when you hit your stop loss or your drawdown. So it is very important to have this discipline, because if you don't, you will actually lose or blow up your account, which will force you to stop trading, whether you like it or not. And so this is why you have to have the discipline to stop when you hit your target, or when you actually hit your drawdowns. And so this is the next one we're going to be talking about, which is the psychology traps, of course. And this next part is very important, because it might actually be the most important part of the whole session, because even for someone who knows every rule, even for someone who knows how to trade, they can still lose money if their emotions, or if they let their emotions take over themselves or take over their trading. And so revenge trading, what we mean by revenge trading is actually trying to immediately win back a loss with another trade. And so if you lose $10 on another trade, instead of waiting for another opportunity to actually show up, you just take another trade right away, so that you will make that $10 back, and so you will end up losing more money than you should be. So that is a very important thing. But if you hit your actually drawdown limit or your stop loss target, so you have to stop. But if you don't stop, you will end up doing revenge trading, which is what we call the emotion. The actually revenge trading is a way where it is a situation where a trader loses a certain amount of money, and then right away open another position to make that money back, but then end up losing more money than he should actually be. So that is what revenge trading means. And the next thing is FOMO, or fear of missing out. And so that is what FOMO means. It means fear of missing out. And so based on what you hear, the meaning is FOMO entries means jumping into a trade late because you are afraid of missing the move. When you saw a large green candle and you thought that the market is actually going to continue to go in an upward direction, you quickly jump in without waiting, or before waiting for the market to actually show you a real opportunity, a real buying opportunity, or a real selling opportunity. You just quickly open a position because you are afraid that you might lose that move or that specific move. And so this is what FOMO means. If you stop, protect yourself from FOMO entries, you will protect your capital and you protect your money in the long run. And the next thing is overconfidence. And overconfidence is means that when you win a trade and it boosted your ego, you feel like you are now the best trader in the world. You can make a lot of profit. So you quickly, because of that excitement, you will actually you will quickly increase your size right after the next trade. So that because now you thought you are the best trader in the world, and it doesn't matter even if you have a winning streak. You can have a winning streak, and when you have a winning streak, it will actually boost your ego, or the feeling, the excitement that you have, the excitement feeling that you have at that moment will just make you feel like you can win every single trade, and then you will just sort of increase your sizing at that moment, or increase your position sizing, and you might end up losing trade. Because if you win 5 trades, use putting $10 or $5, and now you increase your size to $50 because you are winning. Now if you lose $50, you have clear all the winnings that you have before, and even quite likely, more likely that you lose even more money. Now you have a negative net balance, not a positive net balance or net trade, whatever. And so this is very important. It is very important to have the discipline to stay consistently profitable, and you cannot do that, or you cannot achieve that by actually interrupting your own discipline or your own plan, or disrupting your own plan. So you have to stay and you have to trade based on your plan. If you have a $20 winning or profit target, if you hit your $20, stop trading. If you have a $10 a $10 position sizing, don't increase your position until it matters. Okay. And the last but not the least is panic exit. Okay, so this, what this means is when a trading is actually closing on you, when you are losing the trade, you just rush to actually stop that position or to exit from that market. And sometimes you might be right and you might be lucky, but sometimes the market might just be testing actually a flow before it actually reverse, or before it continue to move in whatever direction it is moving. So it doesn't mean that every time you open a position you should rush to close that position because of fear of losing the trade, or whatever the fear is. And so it is a very important thing to actually have. Sometimes it matters, but not all the times. So here's the honest truth. Every trader, even experienced ones, even the most successful traders, even successful ones, even the professional ones, um, has actually felt all four of these emotions, or all four of these points that we have at some point in time. No trader that has been in the market for even 3 months, that has, or even 3 years, or it doesn't matter, even the most experienced traders have experienced some of these emotions at some point in their trading journey, or during their trading journey. But the difference isn't that the profitable traders never feel these emotions, or never have these emotions. They do have these emotions because they are humans. Okay, we are all humans, so we have this feeling. But the difference is that they have rules to protect them against themselves, to protect them from themselves, to protect them from their own emotions, their own impulses. Okay, but the beginner traders have no rule. They have nothing to protect them from making these decisions. And so that is the difference. If you are a beginner trader and you have these emotions, now after this live stream you will know how to protect yourself. If you feel the FOMO, you know it is a FOMO, so you protect yourself and you protect your capital. And so knowing the emotions is the first step, and the second step is actually having the discipline to stop when you have to stop. So this is the difference between actually the professional or the experienced traders and the beginner traders. And so it's not that the professional traders or the experienced traders do not have or do not feel these emotions. They do have them, but they know what they are and they protect themselves against these emotions. And so this is actually the last thing we're going to be doing. And yeah, let's go forward. And so I have this thing for you, and it is the process every trader or every trade requires, or like every trader here should have. Okay, so if you follow these steps, and as you can see them, the first step is analyzing the chart. And so if you open the market, you should not go into the market. The first step is planning. What is your target profit? What is your target loss or your drawdown? If you hit a certain percentage of profit, you will stop trading. If you hit a certain amount of losses, you will stop trading. So you have to plan that beforehand. And then the next thing after you open the market is you have to analyze the chart, and you will learn how to analyze the chart by watching our last webinars and our last live streams, or watching some videos from this channel, or watching some videos from the platform itself, where we show you that there are tutorials that you can actually watch within the platform itself. And so analyze the chart, which is very important to analyze the chart. And then the next thing is to confirm your entry. Also, the rules are very important, and so you have to confirm that your entry rules are genuinely met before you open a trade, not just close enough, but they are met. You have to have this discipline and these filters to actually filter out any fake moment or any fake movement. And then you have to set your position sizing. It is very important, and your position sizing should be set based on your risk percentage. Okay, so that is very important. What is your risk percentage? And so you will set your position sizing based on that percentage. That is also a very important thing to do. And then setting your stop loss before anything else. You have to have your stop loss set even before you enter the trade, even before you open the chart. That is very important. And and then after all these position points have been made, or all these steps have been confirmed, and then that is when you can open a trade, or you can enter your trade afterwards. And so after you finish your trading for that day, because knowing your profit target and your drawdowns is what will actually help you stop when you have to stop and continue when you should continue. And so after you finish trading on that day, you should write down what your profit are, what your losses are, how many trades you've taken. Journal everything that happened. And if you continue to monitor yourself, you will have a clear explanation, or a clear picture of what kind of trader you are. And journaling those things, or writing down those things, is what will help you fix your problems, because you will know where your problems are, and going forward you will continue to solve your issues and fix those problems, and then you will become a consistently profitable trader. And so it is very important for you to actually journal your whole trading journey. So every time you trade, write down what happened, how many trades you have taken, how many trades you have won, how many trades you have lost, what happened, why you lose, why you win. All those things are the things that will help you improve your trading journey, your trading skills, and improve yourself as a trader and as a person, and have the discipline to stop when you have to stop and to continue when you should continue. And using these methods will help you become a consistently profitable trader. And so this is very important, because the whole point of becoming a trader is becoming a consistently profitable trader. And that is how you take trading. You went from hobby to actually having something that actually creates a real income, a passive income for you or for your own family. And so it is very important to have these things, and to follow these rules, and to follow these steps when you are trading. So the last thing I'm gonna give you is the same thing. So I'll actually challenge you before you close out, so that you can have something that you can use. So I want to make sure that before we leave, or before we close, I leave you with something you can actually use. Not just something to remember, but something that you can actually use. And this is what we have. And I'm calling this the 10 trading challenge, or the 10 trade challenge. And what this means is you're going to be taking 10 trades and write them down. Okay, take your next 10 trades using what we have talked about tonight, using tonight's checklist. Okay, based on the checklist that we have tonight, take your next 10 trades, and then every single one, You will plan beforehand, and then you will analyze the chart, and then you will confirm your entry rules before you enter, and set your position sizing, set your stop loss, enter the trade, and then review and journal everything. Write down what happened after the trade, afterward, okay, after you have finished trading for that day or on that day. So not and also it's very important. You should have 10 trades, not just 5 out of 10 or 9 out of 10. You should have all the 10 trades, because that is genuinely how a habit is actually forms. That's actually how you build the habit, the habit. Not from hearing it once tonight, not from hearing it from YouTube or from a live stream, but from doing it on a repeated action, on a repeated course, by doing it repeatedly until you don't even have to think about it anymore, until you don't even have to write or look at it again, because you have mastered it on your own. You know what you're going to be doing, and you know exactly what you're going to be doing or what you are doing in the market. So here's what I want to actually finish, because we have actually past our time, even though we have some few minutes that the mic is actually muted, of course. And so I want to make sure that before we close or before we leave, you guys understand everything. So if anybody have any question, they can just write their question in the chat so that I can actually answer your questions. But before you go, if tonight helped you, make sure you hit the subscribe button in this channel if you haven't subscribed yet, and write your comment or write your questions, whatever it is. I will give you an answer. And if you need any help, make sure that you subscribe to the channel and click the bell icon so that you will not miss any live stream or any video that we will continue to have. And make sure that you come back to the next webinar, because we will be talking about a lot of important stuff, and we will be teaching you a lot of very important things that will help you in your trading journey and in your trading career. So before we go, if you learn a lot of stops and if you learn very important stops, make sure that you hit that subscribe button and you click the bell icon so that you will not miss any webinar or any video from this channel. And so thank you guys, and that's everything that we have for tonight. And so I hope you have learned everything. I'm looking at the chat, and yeah, I have actually been using IQ option for more than 8 years. And so, yeah, that is to answer your question. I have been on IQ option for a very long time, and I've been using the platform for actually more than 8 years. Yeah, that is the point. And so I'm very excited. I'm very glad that you have fixed yourself and you know what you are doing. And that is a very important thing, and that is very important thing to have. And I guess we will be closing if there is no any more questions. So thank you guys for joining us tonight. I appreciate every one of you, the guys, the ones that actually ask questions and the ones that join the live stream from beginning to end. I'm very proud of you, and make sure that you come back the next week for the next webinar. And here's the promo code. Make sure that you use the promo code. You will get, thank you so much, you will get 120% deposit bonus when you deposit using this code here. And so thank you guys, and I will see you in the next webinar, and I will see you in the next live stream in the next week. But until then, thank you once again for joining me tonight, and thank you for joining the IQ Option live stream. We really appreciate every one of you, and I hope you have learned valuable lessons and valuable skills and ton of valuable information in this webinar and